Hello and welcome to Angel Insights, brought to you by SyndicateRoom, and boy do we have a cracker of an episode for you today. Joining me is Keith Wallace, partner at the Investeerdersclub, and Keith is a Scotsman with a passion for Europe. After graduation, he started his first consulting company and ended up in the heyday of the .com boom. When the internet bubble burst, he moved back to Europe to help fellow entrepreneurs avoid the burn rate trap he himself had fallen victim to. Together with friends, Keith started investing and soon became a part of one of the Netherlands' largest networks of informal investors, leading him to found the Investeerdersclub, Holland's most informal investors club, together with Martijn Blom and Gert van Veldhuisen. Keith has extensive experience in setting up companies, bootstrapping, coaching, and pre-seed capital and financing startups. Therefore, without further ado, it gives me tremendous pleasure to welcome Keith Wallace, partner at the Investeerdersclub. Keith, welcome to Angel Insights. It's an absolute pleasure to have you on the show.
Wonderful to be here.
Now, I'd love to kick off today's episode by hearing how you made your way into the world of investing to become, as you call, an informal investor.
Well, I suppose informal investor is a term we use quite often in the Netherlands. And it's the story of most of the informals that are within our club as well. I had a company. It went quite well. I actually went over to the States with it. And when the bubble burst, I came back to Europe. And I was trying to tell people on the continent that the bubble had burst. It was time to do things in a different way, to stop spending money and to start making it. No one listened until I started putting money where my mouth is and working together with a few friends to invest and give advice to companies. So we started doing sort of trickle investment. And from that, started working with the biggest group of angel investors here in Holland at the time, NABIB, and ended up actually trying to buy NABIB because I thought it could be turned into a more successful network, and ended up setting up my own.
And moving back to your time in New York and with the bubble, how did that affect your attitude to burn rates and how startups should operate? I mean, are you very much still the lean startup protagonist?
Very much so. I mean, when I was in New York, it really was during the bubble. There was an event every night. Champagne was being served in almost every bar you could see of the next startup. People were investing in each other's marketing. It was a wonderful period, but it was really the new economy. And by the new economy, it really was an unreal economy that was non-sustainable. And it was good while it lasted, but we all knew there would be a hangover.
Mm-hmm. And many say that we're in that stage now with the huge amount of funding going into startups. What do you think on that perspective then?
It's a very dangerous issue, but I'm going to come across as being terribly Calvinist and say I would quite agree. I think we've got a lot of startups right now who are coming up with overblown valuations based on American exits that are completely unlikely to happen for the average European startup. We have a period where money is going in, but not going into the right startups. And we have a lot of informals that come into the market, start investing when they really don't understand what they're doing and the kind of companies that are more likely to have success. So are we in the middle of a new bubble? Well, I think we're in the beginning of a time where people have stopped really giving a true value to money. And that's a great shame.
And you said there about valuations being inaccurate due to US expectations. How do you conduct your evaluations then?
Well, I mean, I hate to be terribly old-fashioned, but I really look at what has been achieved and to see what has been created by the entrepreneur and put a value to that. I don't value time. I don't value letters of intent that don't actually state if people are interested in buying a certain quantity over a certain period. It has to be a set letter that gives true value. And I'm very into working with entrepreneurs who are able to prove what they say. I don't like great storytelling that seems to come out of the business model generation book and corner. I like if I'm going to be told a story, the story should be factual and in the achievements that have been made to date and how I can help make more achievements in the future. And that's where value comes from.
And now you're a partner at the Investeerdersclub, the most informal group in the Netherlands. So talk to me about that. What's the mission with the club? Is there any sector or stage preferences that you have?
we've always stated within the club that we do everything other than clubs and bars and property. And the big reason is clubs and bars tend to fail a little too easily, and property isn't about the person, it's more about the object itself. So from the very beginning, we've had up to 80 members, different informals that are interested in a very broad spectrum. Average age about 3 years ago was 45. In the last couple of years, that's gone up a bit, and we're now close to 49. But we're still a pretty young group of people. And we've got some investors on board that really like to say, well, I'm not going to invest in someone unless I can have a few drinks with them and see their facade fade. We've got some people that say, I won't invest in anyone until I've been able to go and meet their spouse to figure out if there's support from home. So we have a number of informals that are a member of the club. They each have a very different way of going about the investment process. But we have seen a great deal of success in the club. We have a funneled process from a coffee morning where we talk a bit about investment through to a preparation day that about a third of the people coming to the coffee morning will get invited to. There we put together a proposition that would be useful for members of the club, something that they would find acceptable. If we and the entrepreneur agree, it goes through to deal making. And there we have a record of 1 in 3 companies coming to the pitching event being invested in by the club.
And how many companies has the club invested in now?
There are some 40 companies that the club is invested in. But I should say it's not the club that invests, it's individual members, normally in syndicate, but 40 investments over the last few years.
And having been a partner on this, you clearly believe the potential for group investing and one being extremely beneficial for the investor. What do you think are the key benefits of having that support network of investors around the investor themselves?
I think one of the big issues that we have in the industry is people tend to exit and they think, what's the next stage? I should perhaps start investing in other companies. And those novice informal investors tend to lose their shirt on the first couple of investments because they really don't know how the game is played. And for some of them, it's just that idea, I should invest in something if I'm calling myself an informal investor. So if we bring them together and we give them a mentor relationship with one of the more experienced investors, a lot of the haste to invest is taken away and they tend to make much better decisions. So we find that syndication can be exceptionally useful for the company because if you look at informal money, compared with getting a loan from the bank, it can be quite expensive. So it is about leveraging in the network, the experience, and more of the informal. If you have 2, 3, or 4 informals you can put in, then that can only increase and can be very useful. We've seen the downside on it as well. I mean, we had one company where one of the informals basically started sending 3 or 4 emails a day, calling once a day to the entrepreneur with ideas on how to make things better. But that was also dealt with a quick chat with the other informals and some ground rules. 1 email a day and 1 telephone call per week.
And you said there about investors maybe not knowing what they're doing and feeling they ought to invest if they're calling themselves an informal investor. What do you see as the biggest kind of mistakes within the group then? Are there any naiveties or misconceptions about investing?
Well, one of my business partner actually set up a company that translates into English as the dream business. And when he started as an informal, he said, well, I listen to so many people in the bar at night talking about their dream of what they'd do if they left the corporate environment, that actually I want to make those dreams come true. And it's that kind of naivety that goes away when you've talked with a few of the entrepreneurs. You're really looking for someone that can cope without the angel investor or the informal being there. And he doesn't invest in people who have dreams now. He invests in true entrepreneurs that are able, with a little bit of money and some of the help of the informal, to really grow the business and grow it fast.
And moving out slightly then from the group and the club itself, what are your views on the European tech market as a whole in today's environment?
Is there a European tech market? I see a lot of individual countries that have tech markets, but I don't see terribly many examples of pan-European companies. Now, if I look from a Dutch perspective, I meet a lot of people that say they want to become a European player, but in the last few years I can think of only 2 that have left here, moved to Berlin, and really made something of themselves in that scene.
Okay, fair enough. Then what do you think of the individual European environments? Would you not say though that the likes of Wallapop, which have significant audience in the UK and in many other parts of Europe, but being based in Spain, I believe, is that not a European tech startup success story?
What is a success story? I mean, are we not talking, if we're talking about companies, they should be active in a number of European markets, and we can actually leverage the fact that we have, 350 million people within the European continent, and see them as being able to be all part of the market that we're servicing. Right now, what we tend to have is a company that operates from one border and sells to another. And I'd really like to see us making more cross-border deals, setting up very quickly sales in different markets, if the company can support it. Problem is, most really can't.
It's a very interesting question there. You said, what is success? And it's actually a very good question. Is success the financial exit at the end? Is it growth? What is it for you then in an investment for you to deem it successful?
I thought that this is the bit where I sort of say, well, I like to know that I've made, or at least I'm told that I've made a difference in the investment in terms of helping them to grow. A financial return is always good, but there should be a return for something else as well. We should have changed the market. We should have made a difference. And yes, financial return, always something I'm looking for, but I like something a little bit more. And if I look at some of the things that have been invested in within the club in the last period, the most successful of those have really taken over a market and have changed it and have made it a better place for people to operate. Mm-hmm. Perhaps easier or in some cases cheaper, but in many cases not, but certainly have increased the experience for the user.
And one particular point that I'm very interested at the moment on is whether European startups have to move to the US to get the significant acquisitions or IPOs. What do you think about this? Is it still hard for European companies to be swallowed up for billion-dollar-plus valuations?
I think the only answer I can give to that is yes. I've seen many European startups go across and think that being in the Valley, they're going to be able to be gobbled up or to gobble up others. And the truth is, we have different work methods than some of our American cousins. And it isn't always easy to take across a good team that's quite tight from Europe, transpose it to America, and see it operate in the same way. The costs are different, the market's different, the expectations are different. And yes, many times I will say to a company that comes to us with a multi-million euro valuation, if you want to go after this, then you're taking an American model, you should base yourself out there. But be very aware that it's a completely different market, and you are going to have to take a couple of Americans onto the team to be successful.
Mm-hmm. And on the fundraising side of the business now, we talked about the startups there. You've said before that too many startups look to funding or subsidies from the government or angel investors for money. And you also said instead they should look to their customers for the money. Why is it you say that, and what do you think is beneficial about taking this approach?
Well, I think it's, we really look at a lot of early stuff within the club. So I really get a little upset when I see entrepreneurs coming over and they're offering 5% of their company that hasn't yet started for a substantial amount of money. Basically, they want to be employed in a company that I fund completely. That's fine. But I have the biggest issue in that is that I want them to actually achieve something and to go after those achievements. And I need them to have certain knowledge of how the game is played and how to take it forward. And I'm getting a lot of people that come to us because they want money, not because they really want to have an informal investor or they want to grow quite quickly. So I think that there's an imbalance of information in the market, that people just go, oh, I need some money because I want to grow the business. Or, as I had today with someone who came in and said, well, I want to build up a buffer so that I feel more secure in my company. I don't need to grow anything, but I just like to have 100,000 euros and you can have a percentage of the company. And then I feel that we're not understood as a sector and why people should come to see us.
So what do you think are the right reasons for people to come to see you? For your knowledge, for your connections, for the advice that you bring? Is that it?
I think it is that. It's perhaps something more that the average informal is a great sparring partner. The most lonely thing you can be is an entrepreneur. And you really can't discuss some of the things that the changes you want to make with any of the employees. An informal can be that partner, can be that voice in the back of your head that most of the time you know yourself, but is just someone that is there to caution, to cajole slightly, and to help with the movement forward, but also to remind people of previous promises. Because I think that we really today have very fluid companies that tend to pivot a little too often.
Are you a fan of the pivot as an investor?
I think sometimes you have to change your strategy because the strategy you're following isn't attaining fast enough growth or isn't achieving what you set out to achieve. So we can call that a pivot if we want to, but it's like so many terms like validation and minimum viable product. I tend to hear it from a lot of people that haven't achieved a lot more than to read a few books and to write a business plan.
Absolutely. And you said there about someone coming to you this morning and saying why they wanted investment. So let's talk about the pitch a bit. And you've said before that Dutch people aren't particularly good at pitching in general. Obviously, some are, some aren't. Why do you say that? And what do they do wrong? And what do you want to see in a pitch then?
Well, I don't know. I mean, I think if we look at our American cousins, because we discussed that before, they have sort of show and tell from a very young age. The average Dutch person is always taught that to be normal is good enough. I think that's the best translation of that one. And it's tall poppy syndrome. They don't like to stick their heads above the parapet and be seen. And it's a great shame because we have people come to pitch. And they tell a very nice story over a concept. And you're thinking, there's no chance this will ever succeed. And only in the question round does it come up that they're making $2 million with the company already. It's a reticence to actually champion the achievements they've made. And I'd just like people to be a little bit more forthcoming with that. And it's a very Dutch thing to be so quiet about achievements, I think.
So be bold in your achievements.
Be bold in your achievements. Tell us what you've achieved. Don't tell us the story, because let's face it, anyone can come up with a good story that's been given the pitch training. Mm-hmm. But achievements are more hard to come by. And actually, if you tell me your achievements, I can start thinking, do I want to listen to this more based on substance rather than on just an idea of whether I like you as a person or not.
And Bill Gurley's written before about pitch decks and how they're fading from the industry. Do you like to see pitch decks, or are you much more of a conversationalist?
I'm a conversationalist. I love to see people face to face. I love we're in an industry now where more and more deals, especially in the non-professional environment, are made online. But if I can't see the whites of people's eyes, if I can't see their personality, if I can't give them a couple of glasses of wine and figure out if they're presenting a facade to me or something real, then it isn't something that I'm going to invest in or recommend to my other investors.
Mm-hmm. And having made investments now for a number of years, can you tell us about a war story, maybe? Obviously, no names. What went wrong and how your strategy changed as a result?
Yes. I can go back to the very beginning. And the people involved will know who they are, but everyone else won't. But we invested. I was sitting on a symposium, and I heard an entrepreneur say, I've been pitching this and no one wants to invest, and it's a great opportunity. I said, well, actually, we're looking to invest in that area. Come and see us afterwards. So we ended up making an investment in some very young people. They were students at the time, but they already had customers, and customers in 4 countries around the world at that point. Good turnover. And it came one day that they came to us and said, well, we're now in our final year, and we have the opportunity to go abroad for a year to broaden our horizon and make us more balanced individuals. And there was absolutely nothing in our contract to deal with such a thing. So we saw one by one members of the management team leave the country and come back. And it slowed down the growth of that company by at least a year. And a further round of investment was required because of it. So I think every time from that point on, we've made another mistake in the deal we've put together, and we've tightened up our contracts or we've loosened them depending on what was there. But I think if you ever stop learning from this process, then you should probably leave the industry.
Mm-hmm. And do you have a preference then in founders then? Do you like single founders, co-founders in case that does happen and you need someone else to step into the breach? Do you like young founders? Do you like experienced entrepreneurs? What's it for you?
The great thing is that, with the Investors Club, I probably see upwards of 500 or so entrepreneurs per year pitching towards me. There are only a very few that still make the grade that I think, wow, I'd love to invest in you. And it's all about the entrepreneur basically giving out some form of energy that I know if they can interest someone like me to make me sit up and go, wow, this is worth listening to. They can do that with customers. They can do it with business partners. They can energize their staff and bring it further. And again, I go back to that whole thing over achievements. If they can tell me what they've actually done, and there's a smile and a glint in their eye that they're happy with what they've done, but also the fire and the passion to take that further, then I'm interested in listening more and seeing what I can do to help.
And I'd love to dive into a quick fire round now with you. So your favourite book and why?
I think that would be Effectual Entrepreneurship, because we talked a little bit about lean methodology. But actually, I think effectual or effectuation is an exceptionally useful strategy for the setting up of companies, and it's based on the behavior of successful entrepreneurs. And it's basically 5 principles that every good entrepreneur should stick to. The first one, bird in the hand. So start with what you have and don't look at always bringing on board external capital until you really need it. The affordable loss principle. Only spend what you have in the beginning. Create some success and then look at other options. The crazy quilt principle. Work together with others, because if you can't convince some partners to start working with you, you're never going to convince an investor. And as well as that, the lemonade principle. Be open to opportunity. Be open to the changes in the environment and adapt and see bigger opportunities out there. And if we go back to that awful word that I said earlier, pivot is possible if you can have agreement with your shareholders. And the final one, which is really important, is pilot in the plane. And that's just taking small steps and maintaining control rather than predicting the future. And I think that it's a great book for everyone to read, written by a professor and PhD student, and it really is something that changed my view of entrepreneurs and the kind of people that I invest in.
And then what do you wish you had known from the beginning of your time investing that you now know?
Gosh, that's really tough. There's so much I wish I'd known in the very beginning. Maintain a distance from the entrepreneur. Never get so caught away that you get caught up in the hype of the entrepreneur, but try to maintain a distance that gives you the chance to come up with something slightly outside of the box.
The biggest overhyped and underhyped sector?
Biggest overhyped sector. I see an awful lot in med tech right now with very, very high valuation. So I think I would plump for that.
And is the high valuation due to the IP, or is that not the reason?
I think it's sometimes due to the university incubators stating that there is a valuation there. And I think universities should stay to research and let people on the outside start coming up with valuations.
And then what about underhyped sector? Is there any way you see real room for innovation?
Well, I mean, I think that it's getting back to the real market. So people that come up with how to change traditional sectors, I really would like to see more of that. Traditional business but done online. And trying to come up with a realistic valuation on that and to say that they're going to take things a little more slowly than tradition. So basically that's what I'm looking for.
And then your favourite blog or newsletter?
Oh, well, I could, of course, say your show.
Well, thank you so much.
Yeah, that's very good. I mean, I have to say that I tend to follow so many different things, but the one thing that I really love to read is just the delights of the BBC site, because it gives ideas not just in the tech environment or in the investing environment, but in something broader. And I think that that's something that we should all stick to.
And then finally, your most recent investment and why you said yes.
Well, actually, I'm going to put that as answer that slightly differently. Over the last year, myself and my business partner have been investing in the setting up of a new fund. and that is going to be the HEVOS Middle East Creatives Fund. And that's bringing money to the creative industries in the Middle East, based out of Lebanon, Egypt, and Jordan. So that's where most of my capital and time have been going in the last 6 months.
Well, fantastic. Huge congratulations. Is there an average check size you're looking for? How big's the fund? What are the plans for that?
Well, we're also raising money on the fund as well, so that's something that takes place. And we're looking for a number of investments. The principal ticket size should be about $100,000, with follow-up investment possible for a couple of companies. It's only a $7.5 million fund. But it's a really interesting area. And sometimes we tend to focus on Europe and North America, as they're the only places that money can be made. But you have an Arabic world that is united by one language, that is united by a culture, but has wonderful perceivable differences that if you can make it there, you can make it in other places. So it's a place I'm really happy to be in, and really would invite any of your listeners to come across and look at the companies that are there.
Well, Keith, I really have absolutely loved interviewing you today. It's been really fascinating. So thank you so much for giving up the time today to be on the show.
Absolute pleasure.
And I would like to give a huge hand to Joss Dirkser, our second ever interviewee on Angel Insights, for introducing us to Keith today, without which the interview could not have happened. And we'd also like to remind you that early stage investing is risky, therefore please ensure that you engage in the proper due diligence prior to making the investment. Thank you so much, as always, for your continued support, and we look so forward to seeing you in next week's episode.